Yeah, now we're talking. Back in the action once again. Always great to be here with you guys and gals on this nightly newsletter. Time to get back to work. Time to get prepped up for the next big reliable setups we see setting up on our favorite markets. It's newsletter time. It's Wednesday evening. It's June the 12th, 2019. My name is Joseph, by the way, and this, as always, is your nightly newsletter. Now, just in case you missed it last time, don't forget, guys, I help traders, professional traders, brand new rookie traders. I help traders find high quality, dependable, reliable, usually profitable setups using a simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to set the table. My job tonight is to identify the best levels, the best setups, the best scenarios to keep your eyes on for tomorrow. That's Thursday's trading session. And we got a lot to cover here tonight. We'll check the calendar. We'll check all the charts. We'll grab some oil, some S&P. I got the Nasdaq, the gold, and the euro. Finally getting that pullback on the euro. I'm going to jump in first tonight on the oil because I'll tell you, the oil market, it just gave us that shot lower, but that move lower this afternoon definitely cannot be trusted. Let's jump into that oil chart here first of all. The black gold, the Texas T. What happened today? Well, of course, we obviously saw this big dump, right? This big drop right at the opening, or not the opening bell, but right into Asia, right? This big run lower. And of course, anytime we see a strong move in one direction, we're going to probably see a second leg. So there's not a lot of new stuff here. What is very interesting though is what happened right here. Most of the session today, in fact, if you were to put one of those volume profiles, right? Most of the session was spent right around, right, that $52 a barrel area, right? Remember that number, 52, because 52 probably tomorrow is probably going to be where we at least go back at least once, maybe twice tomorrow morning. Because anytime we see a strong move down, and then we spend a lot of time going sideways here, right? That's where the market really wants to be. And then the kind of last-ditch effort for the bears going lower here, right? That move right there really cannot be trusted, right? It's a shot lower. It's probably just buyers getting out. A little bit of news mixed in this afternoon out of the Middle East. The bottom line is that until I can see these sellers hold this move lower, I do not trust this move down. In fact, I'm looking for a move back up into that trading range. And to be very, very honest with you, because of the strength of this move lower, I've got to kind of thread the needle on this. And ultimately, there are two different scenarios, two different setups, two different situations that I'm watching for right now. One will be the completion and the other will be a failure. So we're going to talk a lot about those two scenarios there. And then honestly, if we get lucky on this, we may get a big old pendulum swing here and we might just be able to get a nice big run right back in the opposite direction. At the same time though, right, we definitely don't want to fight the trend. I will give you guys some guidance on what to expect if the market goes lower, because we've got a big potential trap down here if this market tries to go lower. If you're an oil trader like we are in our trade room, make sure you stay tuned for more on that tonight. Over on the S&P, now the S&P rolls lower, right, yesterday, and this just a lazy guy right now, just running lower, kind of rolling lower here. The bottom line is there are three main components on this chart right now. One is the bearishness in the market. Two is this kind of channel, right? This little sneaky kind of hidden channel here, if I can get it on there, right? That channel, and of course, that trading range. Now, believe it or not, all three of those components are important ingredients in the recipe for success tomorrow. Anytime I have a range, I always know, right? I want to buy low. I want to sell high. I will keep an eye out for a breakout and a possible short covering rally, a breakdown, right? So we'll talk about what a breakout will look like, how to qualify a breakout, because you definitely can't trust a breakout in a range-bound market. The most important thing right now, though, is I'm staying away from that middle. I'm buying low. I'm selling high. And I'm going to talk about my two favorite patterns, maybe three patterns up here we can look for, and one very important, many of you probably already know this one, but one very, very important reversal pattern off of that low. We saw a couple examples of those already here today, and we're going to dig into that in just a few moments. So we'll talk breakouts, we'll talk fade and breakouts on the S&P, and then of course the Nasdaq. The Nasdaq is actually pretty darn interesting here right now. Much like the S&P, we know we're bearish overall. We know we have a trading range on here. We know we have a kind of, again, like a hidden channel here. But I'll tell you right now, the big story on this chart is this wedge, right? Now, this wedge tells us so much about what to expect for tomorrow. It tells me four different things. And, we know we're bearish, right? So I definitely want to be a seller, right? I've got three different patterns to watch for to be a seller. I also know, right, this type of move can easily reverse. And so we'll talk about what a reversal will look like, because obviously you can't just sell a move that goes higher, right? You can't just buy a move that goes higher. And then with this wedge, we have potential here to be a buyer here too. Wedges are really, really powerful tools for counter trend trades. So we're going to talk about a lot more about that, right, as we go here tonight on that Nasdaq. So Nasdaq really setting up with a nice chart here for us. But don't even get me started on this gold. Boy, gold looks like it wants to go back and fill that gap from the beginning of the week. We talked about this earlier, right? Most of the time, those gaps, they get filled before Thursday morning. We're almost there, maybe tomorrow. But, like I always mention, you guys, don't get too wrapped up in filling gaps. But it does look like that gap is on the radar here. A couple components right now. There are three main components on this chart. One is momentum, bullish. Two is the trading range. Buy low, sell high, avoid the middle. We'll talk more about that. Three is this hidden channel, right? And I think that hidden channel is really going to be our biggest weapon here tomorrow. I do want to be a buyer. I've got two distinct patterns I'm looking for to buy off of that low. And, I'm definitely keeping my eyes open too, because we may get that run higher here, fill that gap, reach that measured move, and then I'm thinking maybe we look for a last-ditch sell right back down tomorrow towards the end of the session tomorrow. So we're going to talk about breakouts. We'll talk about fading those breakouts. I get a great lesson on gold here for you guys tonight. And then, of course, we'll wrap tonight here on the euro. We've been waiting for this. We've been waiting on this all week, euro. We're now here. We're here. We're finally here. Of course, last night we talked about, right, this bullishness into a trading range. We've been waiting for the opportunity now to use that trend line, right, to buy off of this low. I'm right there. I want to buy. I want to buy everything I can get my hands on this euro right now. But here's the problem: we've got too much momentum right now. Right? That momentum going lower tells me there are two scenarios, a lot like oil, two scenarios that I need to be ready for here if I want to buy this euro. What if you want to sell it? We'll talk about how to get short on this euro as well, because there's one very specific pattern that I've really got to sink my teeth into on that euro if we're going to be sellers here, right, on the 6E. So boy, do I have a lot to cover here tonight on this video. Euro, gold, Nasdaq, S&P, oil. But before I jump in and put all the details right on these charts here for you guys and get us ready for tomorrow, I just want to remind you, right before I publish the video on our YouTube channel, I always send an email out to everyone on our mailing list. I want to make sure you get that email every evening so you know when this newsletter video goes live. It's very easy to join the mailing list. All I need is your name, your email address, a real email address, please, and then make sure you hit that subscribe button on the right-hand side. Now, don't forget, your job is not over when you click that subscribe now button. You also have to go out and check your email inbox. In that email, I'm going to send you a verification link and a welcome email with a bunch of great stuff in there so you and I can get the most out of our time together every evening on this newsletter. So don't delay, pause the video, grab that mailing list, give me your name, your email, subscribe now, and then remember, sometimes those emails, sometimes they get stuck in your spam filter. So if you're ever waiting for an email from me and you don't see it, sometimes those emails, they get pushed into spam. So make sure you whitelist us and check that spam folder or your junk folder or your promotions tab in Gmail, right? Or any of the other folders you guys may have in these free email services, because sometimes they get stuck in there for you guys. Alrighty? Also, don't forget, I'm always listening to feedback. I always love your feedback. If you would give me a couple moments of your valuable time, post in the comment section below. What do you love? What do you hate? What's your favorite part about this video? What part, if you were in control, would you cut out of this video, right? What do you wish I would stop doing, or what do you wish I would do more of every evening on this nightly newsletter? Guys, I am always listening. Right? My crystal ball doesn't work anymore. I can't read minds anymore, right? I need you to tell me what you love, what you hate, right? And how I can keep making this a better resource for you, because that's why I'm here every evening, right? Working so hard every evening on this nightly newsletter. And then speaking of you, I would love to talk to you. If you have any questions about brokers, charts, data, how about free passes, right? We get great free passes to our trade room. We got free trading classes. If you want to learn anything about getting started as a client, getting your toes wet, right, with your feet wet with our free classes, right, call that toll-free phone number in the upper right-hand corner. Use that live support tool. I'm always here. And you know what's funny? I actually talk on the phone. So when you call the office, I pick up the phone, we answer the call, we actually talk. It's true. No call centers, no chat bots, right? No automated systems here. Just real people working real hard, right, for great people like you. So call that toll-free phone number if you have any questions about anything we talk about in tonight's video. I'm excited to hear from you, answer all your questions. That way at least you know you got the good stuff straight from the horse's mouth. Let's jump in. Right? We'll talk more about that when we speak together on the telephone. Let's get ready for tomorrow. Tomorrow, Thursday, the 13th of the month of June. What do we have here on the schedule? Tomorrow, the only real news we have tomorrow is that jobless claims report. And honestly, the jobless claims report is probably not going to be that big of a market moving event. So whenever I see a day like tomorrow, and remember, as we've been talking about here this week, we've got things like rollover. We'll talk about this in a moment. This is the second week of the month, which means it's kind of a floundery week, right? There really isn't. There's not a lot of real strong themes going on right now. We're still talking about trade, right? We're still talking about tariffs. We're still talking about Brexit. We still have all these underlying themes here happening right now. But tomorrow is probably going to be a day where we're going to have to wait and kind of see what type of headlines that we get, because there really isn't anything that stands out right on our calendar tomorrow. If I had to guess tomorrow, I would guess the best setups are going to probably come between 9:30 and 11 o'clock Eastern time. And I would imagine the big moves happening shortly after 10 o'clock Eastern time tomorrow morning. So what I always do is on days like tomorrow is I get to my desk early, get a nice cup of matcha tea, maybe some coconut milk in there, right? Some lion's mane mushrooms, right? To get me in the right mindset. And I get all prepped up and I stay patient. Tomorrow is going to be a day, most likely, and hopefully I'm wrong. Hopefully something comes out overnight and the markets really start to move for us, right? But if we do have a bit of a slow session tomorrow, right, because of that lack of news, you know there's going to be 1-2 big moves tomorrow. Just stay patient for it. And it's all about mindset on days like today. You know, it's the difference of, right, between let's go make some money, right? That's how I used to start my day, to now when I start my day, right, is tell me, right, what you want, right? Tell me, market, tell me what you're doing, and let me participate with you, right? So we kind of shift our mindset, right, from let's go to, all right, let's see what unfolds here today, right? Let's go where the markets take us, right? That's that, right? That simple shift in mindset tomorrow morning. What I always tell my clients is align your expectations. Really, trading is a lot about aligning our expectations. And on a day like tomorrow, by having the expectations of, I've got to trade, you're probably going to overtrade and you'll probably lose money. Okay, I did that when I was a rookie. If you're watching this right now, when you've gone through that too, you probably know the words to that song probably too well, right? So I always start my day off with a slightly different mindset, right? I say, all right, Mr. Market, all right, Miss Market, you tell me what you want to do today. You tell me what direction, you tell me the structure, and I'm just along for the ride. Shifting that mindset, being more of a, let's just see what you give me. I'll take what you give me here today. That way you're not pressuring the market and you're waiting for that, again, 9:30 to 11 o'clock. You're waiting for that nice silver platter with that beautiful A-plus setup. Now, don't forget, we do this together every morning in our trade room at 8 o'clock Eastern time. So you're not alone out there. I know it can be difficult sometimes when markets are a little bit sluggish on a day where there's not much news. But that's what I would recommend if you're doing this tomorrow morning on your own. Now, let's get ready technically, though, right? So now you know mentally, right, kind of how to get the right mindset for a successful trading day tomorrow. Let's talk about markets. Oil, S&P, Nasdaq, gold, and euro. Now, as I mentioned in the introduction, the day started off today red hot. In fact, it was kind of funny. We kind of laughed this morning. We came in this morning to the trade room at 8 o'clock Eastern time like we always do. And we said, well, I'll be darned, right? They got that pendulum swing. Pretty incredible how well that pendulum swing works, right? It's too bad that whole move happened pretty much right before everyone woke up, right? But that move straight down, I mean, we went right to that pendulum swing. It's a great feeling to know that your analysis is right on track. So they run down to that pendulum swing, big run lower. And of course, then they just kind of, fiddle around a little while, right? And again, as I mentioned earlier, if you were to look at a volume profile of this chart, all of that volume will be piled up right on top of that 52 bucks. And so the odds are pretty good, if you're an auction market theorist, if you like market profile, things like that, volume spread analysis, you know that we're very likely to go back into that range. Okay, the problem is that I've got one hell of a move lower, right? Those bears are not joking around. Now, I don't care what happened. This might be some news. It doesn't matter. It really doesn't matter why, right? Forget the why. The why is irrelevant. All we have to know is this a strong bearish momentum? And because of that strong bear momentum, if I'm going to be a buyer going back into that range, I've really got to be prepared for two scenarios. First, anytime I see a strong move in one direction, I have to expect another leg. Okay, so just think about that. Anytime I see a strong move in one direction, I have to be thinking you're going to probably see another leg. And oftentimes that second leg is symmetrical to the first leg, right? I call them measured moves, or you might know them as AB equals CD patterns. Okay, so that's the stage, right? We know the market's going to probably go back into that range, but I don't dare buy it because it's so darn strong. Now, whenever we have that strong move down, you've got to think they're going to probably get a second leg. So let's just say the first scenario is they complete the retest of that low. Once they get that retest, here's what you want to see. You want to see a strong 1, 2, 3 off, draw that trend line, and you're looking for that buy. This is a very strategic pattern, okay? And you don't want to force this. What you need to wait for is let these sellers, let them get that next leg, right? Great job. Congratulations. You did what we thought you were going to do, right? You got that second leg. Once those sellers once they get that retest, okay, watch for that big jump, right? It's not a big jump. It's just you're going to see it, right? You're going to see it here, and it'll look like this one right back here, right? It'll go up and over, okay, up and over. Now, draw that trend line up, right? Draw the trend line up, and what you're looking for is you're looking for that failure off of that low, right? Obviously, we did not get that today, right? It shot back down again, okay? Now, keep in mind, okay, as we get that 1, 2, 3 up, right, that's going to now set the table for the trend line coming in. Okay, the trend line is your biggest resource now, because now when those sellers come back in, they tried once to sell it, they tried twice to sell it. Now what's happening is you've got that low, you've got that support, that's your sweet spot now. I'm buying into those stop losses for those sellers, right? What's happening is the bears are trying once, the bears are trying twice. I now know right where their stops are, right? And I'm buying right into those stop losses. Okay? This is called a nested failure pattern. Okay? Now, remember this pattern. It requires the retest of that low. Now, here's the second scenario. Okay? Let's say we do not get the retest of the low. Okay? This is one that's tricky. This one takes a little bit of patience. Okay? Now, here's where we want to see the market go up to the moving average. Now, again, the first scenario was we retest the low. Then we start looking for the reversal. Are you with me on this? Okay? This one's not going to get the retest of the low. So now we go up. The bears try to sell off the moving average. That's the first try for the sellers. The sellers are probably going to try twice, okay? Just like they did back here, 1 and 2. Right? The bears are going to probably try twice, and you want to respect that. Okay, so let them try once, let them try twice. Now, at that point now we look for the trap, right? Now we look for the trap, and we're buying that trap low. We call this a crown reversal, right? Now, you can see this example right here. We go down, the bears try once, the bears try twice, and look where those buyers came in. I'm not making this stuff up, as you can see, right? Right there. Okay, that's the crown reversal, right? This puppy looked like they were going to make a run for it here today, but again, I think that move down was just too strong for them. Okay, so that's the pattern. Now you've seen a good example of it. That's the second scenario. Okay, so once again, it's either do we roll over, get the second try, and then 1, 2 up. Again, draw that trend line. Okay, try to get it off that low. Okay, or do we see it run up 1, 2, and again, it's a trap low. We call these crowns, right? Crown reversals. Okay, now what if the market just runs, right? What if we just run? What if we run back up? Then what's the plan then? Well, we know the goal, right? We know the goal here is to get back into that range. So I've got to find a way to get in before I get there. Okay, let's talk about it this way. First of all, if we get a big run back up, here's what you're looking for. A trap. I'll call this a two-try trap. I want to see it 1, I want to see it 2, and trap. Okay, and the reason why I recommend a trap setup here is because I want to buy as low as I can because I don't want to buy inside that range. With me? Okay? Now, another scenario that you want to keep your eyes on here, right? Again, that we're expecting the market to go back into that range. What if the market goes lower here? Okay? Then what are we thinking? Well, here's the problem. You look left on this oil and look where we are. Right? We're right at this big low right here. We're not there yet. So what's probably going to happen is if we do make a run lower, it's going to look very convincing. And you need to ignore that move lower. Here's what I want to see. I'm going to have to see a very strong move through. This is not going to be easy to sell this market. This market is very, very difficult to sell here. Okay? To sell it right now, I'm going to have to see it go through that low with what we call a 1, 2, 3 breakout. That means I've got 1, I've got 2, pull back to the moving average, and 3. Okay? It's going to have to really move through that low. Okay? Very strong. Then I'm not going to sell down here. I want to sell high. And I want to do it before I get to that $50 a barrel down there. Mark up that low. Mark up that low. Mark up this high. And that's now where I'm looking to sell off that high. We call these 1, 2, 3 breakouts. It's a breakout of the range, right? It's a breakout of that original range. Okay? 1, 2, 3 breakout pattern. Now, is there any way for us to sell as the market goes higher, right? As it goes higher? Absolutely, right? Being a seller on this, I don't expect this pattern to be pretty, But imagine now we run up. The buyers now try to buy that pullback. They don't jump off the moving average. They kind of get stuck at the moving average. Once we see those buyers now trying to buy that pullback, as long as they don't jump off it and go higher now, I'm going to look for a short right below that low. Because buyers, much like we saw back here, they'll go up, they'll try to buy it, and again, it'll come crashing back down. Okay, now you can see there's a very big difference here between, right, selling it low and selling it high. This is a much more desirable sell here. Again, it goes up, it doesn't run, it goes up, and it gets kind of stuck around that moving average, right? We see the buyers that buy the pullback. We know where their stops are. Strong signal candle, right? And I'm selling into it. All right, guys? So we've got some sell patterns here, got some buy patterns. I'm expecting this market, though, is probably going to roll over and one more down, and then we'll get that rally up. Or it's the one, it's the two, and the go back up. That's what I'm anticipating. But just like you, I'm going to see what this market gives us over the next few hours as well. Now, I've covered a lot here on this video in just a few moments here on this chart. I want to give you more. But I've got to keep moving. I got more markets to cover and more stuff to prep for tomorrow. If you want to get a deeper dive, if you want to get more information on all my favorite setups, all my favorite patterns, a breakdown of what I call my 3-step trading strategy, I'm going to put a link up top there in the upper right-hand corner. I'll also put a big red button right below the video tonight here on the trading blog at Sideways Markets for our free trading classes. I want to teach you all that I know about these markets. If you're here for the first time today, or maybe you haven't taken me up on this offer yet, grab that free class. The link is in the upper right-hand corner, or grab that big red button below the video tonight, right on our blog, and get access behind the scenes, right, for our members materials as part of that free class. Let's keep going in the meantime. Okay, I'll see you inside the members section on the free class. In the meantime, though, let's get to work here on the S&P. As I mentioned earlier, the S&P is bearish. Most important thing right now is the range. Anytime I have a range on the chart, the range always takes the precedence. It does. So anytime I have a trading range, okay, what I'm going to do is, if this is my range, I'm going to use the size of that range to create levels of resistance overhead, and you'll learn a lot more about this in the free class. I'm going to use the size of that range to create support levels below. Then, once I have my range and my levels of resistance above and support below, I'm going to use a very specific type of entry pattern to buy low and to sell high. Makes sense, right? Buy low and sell high. So, for example, as we go lower here, for example, I'm going to use a simple entry pattern called a failure setup. And a failure setup just simply recognizes that anytime a market goes sideways, it says the market's balanced. And when a market moves outside of balance, it usually comes right back in. It moves outside of balance, it usually comes right back in. Now, sometimes you'll see a breakout. There could be news that comes out, a natural disaster, a political announcement, right? There's lots of times when some outside influence may cause the market to view the price as being too high or too low, and we will break out of that range. But most of the time, though, the best way to trade these range-bound markets, these sideways balanced markets, is to wait for those buyers or sellers, right, to try to make a run for it, right? Try to make a breakout. And this is kind of like what crude's doing right now. Right? This is very similar to what oil's doing. Once we see that move lower, wait for, in this example, wait for the sellers to try to sell that pullback. Most of the time, that pullback will fail, and you can buy right into the stop losses of those sellers. Same thing is true to the buy side. Right? On the buy side here, if we go higher here now, right? The buyers, of course, are trying to break out. Just wait for those buyers to try to hold the pullback, right? Those buyers will come in. They'll try to buy that pullback. When they do, you know where their stops are now. You know the market's balanced, so it's probably going to go back into that range, and I can sell once I see that, right, that setup start to fail. Now, sometimes these ranges, they do break out, and a breakout pattern is actually pretty easy. I wait for that strong move up. I wait for the pullback, and if it jumps off the pullback, we call these 1, 2, 3 breakouts, then I know it's a breakout, right? And I've got a great pattern for that 1, 2, 3 breakout. I mark up these highs, mark up that low, I create a hidden channel, and I look to buy the low of that channel. Okay, so now you know the basic idea, right? That's the basic idea of a range, and you're going to learn a whole lot more about range-bound markets. In fact, I'll show you hundreds of examples of those range-bound markets, right, inside of that free class that I mentioned before, below the video or in the upper right-hand corner. So, there's my trading range. Now, we have a bear bias, don't we? Right? That bear bias tells me I can be aggressive being a seller, but I've got to be conservative being a buyer. Okay? Let me say that one more time. In a bear market, right? In a bear bias, right? In a bear momentum, I can be aggressive as a seller, but I've got to be patient and conservative, right? As a buyer. That makes sense, right? Because you're buying against the trend, so you better be conservative. Sorry about the spelling on that. Okay? So now that we know that, let's dig in, right? Let's dig in. So as we go lower here, let's talk about going higher, right? I want to be a seller. Great example right here of a attempt to break out. The buyers try to buy a pullback, and what happens? They fall flat on their face, and you can sell right into that failure. Now you'll notice, right now, we're pretty much just kind of stuck right in the middle. What do you do in the middle of a range? You do nothing. Because remember, that's the balance area. You know, trading the middle of the range is dangerous because you're already trading where the market wants to go. It would be like me getting in my car right now, driving to LAX down the street, and getting a ticket to fly to Los Angeles. They would look at me like I was crazy. They would say, you're at LAX right now. You don't want to fly to LAX. You're already here, right? Me trying to do that is just like buying inside the middle or selling inside the middle of a range. This is where the market wants to be, right? It's going to probably go down and come back up, right? Go up and come back down. So stay away from the middle, right? Stay away from that middle. Now, I want to see this market now try to run higher, right? Show me you mean it, right? Show me you mean it. Show me these buyers want to break out. Now, when the buyers try to break out, that moving average comes over. The buyers now will try to buy that pullback, right? They try to buy that pullback now. And again, if they jump, it becomes a breakout. If they can't, we sell into those stop losses. Again, we call these failure patterns. Okay, now, what if they do hold it, right? What if they do run up? The moving average comes over, right? Buyers hold the pullback. What if they do, right? What if they do jump off it? Great. Mark up that high, mark up that high. That's going to create a hidden channel off of that low, okay? Off of that low, all the way down there, okay? Not that low, okay? Ignore that low for right now. Off that low. That creates that hidden channel, and that's now where I want to be buying right there. That's your sweet spot. Where that low and that low collide, that's the good stuff. Okay, we call those 1, 2, 3 breakouts or 1, 2, 3 reversals. Now, where's that target? Well, I would imagine that 2,900 big round number will definitely be on our radar, but I wouldn't stop. I wouldn't take my final target there. I would leave a runner to go back up to retest those big highs up in this area up here. 2905, 2911, that's where these buyers want to go. They want to go back up to retest that high. Okay, so that's the target for the bulls, okay, if we get the reversal. Now, what if we go lower here? Okay, we know again, buy low, right? Buy low, sell high. What if we go lower? Okay, if we go lower, it all depends on the strength of the move. Okay, if we get a very strong move down like we did on oil, we have to respect that momentum and expect to see a second leg before we get, what was it again? The nested failure pattern. Remember this again? Remember it? It was a 1, it was a 2, and a go. Remember that again, right? Let the bears try once, right? Let them try twice. Does that ring a bell, right? We just talked about that in oil. Okay, that's called a nested failure. And again, if the market really runs, right, really runs, let them get that second leg, then go 1, 2, and in from there. Okay? Or strong move down, crown reversal, right? Let them try once, let them try twice. Again, hopefully you can see the subtle difference there, right? It's a very subtle difference. Okay? Look back here. Good example back here, right? Right there. We go down. The bears get their second leg. They then try once, they try twice, and they run up. See that? Same thing, right? We go down. If it's a strong move down, let them get that second leg. Then 1, 2, and up from there. Or strong move down. Again, you've got to respect that momentum. 1 try for the bears. 2 try for the bears. Right there. That's your entry right there, right? We call these what? Crown reversals. Okay, again, you've got to respect that overall bearishness, okay, if it rolls lower. All right, guys? Those are 2 patterns that I always like to look for when I'm going against the trend. So stay away from that middle, buy those lows, sell those highs, and again, watch out for those breakouts. I'm okay with the breakout, but only if it's qualified, right? Only if it's qualified. Remember, we talked about this earlier. It's the mindset, right? I'm not trying to force trades tomorrow. I'm telling the market, you tell me where you want to go. You give me something that I like and I'll take it, right? But if you don't, I'm going to sit here and wait. Now, over in the Nasdaq. The Nasdaq's a pretty cool little chart here. Very similar. Bear market down. Bear market down into this really tiny little range right there. Now, I'll be honest, I almost didn't mark this as a range because let's put it this way. It is a range, but you'll notice what's happened. They've kind of shifted that range, right? It's kind of cool, right? Remember, you take the size of that range, and that range creates these levels of support below, right? The levels of resistance above. You'll learn more about that inside of our free classes, and you'll learn a whole lot more about, right, the dynamics of how to trade that stuff inside of our membership classes. The most important thing right now, though, is we know that this range has a bearish bias to it. Okay, so we know right away, right? We know we want to go up, buyers fail, and sell into it. We want to go down, let them get the second. Yes, 1, 2, and then back up. You're getting it, right? We go down, then what? Crown, 1, 2, trap, and go. See? I knew if you just showed up every evening with me, keep following along, keep posting questions in the comment section, keep calling me in the office, right? And we'll make you into a professional trader, consistently profitable, confidence as hell, right? Confidence oozing everywhere, right? That's the type of trader I want to make you into with this newsletter. Now, the range is pretty easy. We talked about that before. What about the wedge? Okay, the wedge is pretty darn cool because look what the wedge does. Now, what do wedges tell me? Okay, a couple things here. First of all, a wedge. I was just teaching this to a client of mine. Wedges. First things first is the vertex, right? The vertex of the wedge. This is major support. And honestly, you really don't want to mess with that support level. That is a nasty level of support. In fact, in my video classes, I always say that the most reliable counter trend trades that I've taken are going to be off wedge support. So that level is key. Next, when the wedge is wide, I can trade inside. Okay, this is really all about mindset. When the range is wide, I can trade inside. Why? Because there's still a good risk-reward ratio inside that wedge. Does that make sense? Right? I can risk small to earn large inside that range. Okay, most folks get that. That's pretty simple, right? As the wedge starts to get narrower, what happens? When it gets narrower, what happens? There is no good risk-reward ratio, right? That's the problem, right? There's no quality risk-reward ratio at the narrowest point. Okay, why? Because there's no room, right? I can't get a good reward for the risk I have to take. Okay, now I said it's all about mindset. One day near in the future, you're going to have a lot of experience under your belt, and you're not going to force trades anymore, right? When I was a rookie, I would force trades. I would go out there and try to take the money. But now as a more experienced trader, almost 15 years later, I come in every morning and say, okay, you tell me, what are you going to give me that allows me to go with momentum, get a good risk-reward ratio, and get a quality setup? By the way, those are three things right there, right? What was it again? Go with the Momo, right? Give me a good risk-reward ratio and a high-quality what? A high-quality setup. The setup gives you the edge. You have all three of those scenarios. You have everything you need to be successful. Okay, I'm not, obviously I'm not giving the nitty-gritty details here. How to define momentum, how to get your quality risk-reward ratio, how to qualify the setup. We'll cover that in our video classes. But those are the three main components. I don't have a good risk-reward when I'm in the narrowest part of that range. I think that makes sense. Okay, perfect. So the problem we have now is that when we're inside the narrowest point here, we don't have a lot of space. So we have to get out of that area, right? And that's when you start to see these big kicks, right? You get these big, deep pullbacks. Now, this deep pullback tends to make people freak out. And they think, oh my goodness, we're bullish, right? We're reversing. We're probably not reversing. We're probably going to end up right back down again. And because of that big bullish blast, I want to wait for those buyers to try to buy the pullback. You know where this is going. If they hold it, they keep it. If they don't, we sell it. Okay, it's the same basic idea as a general failure setup, right? But again, think about the narrower where it's going. So now, as you look at this chart right now, look where we are. Nice and narrow, right? This thing is tight, right? Like a tiger, right? It's tight down here. Very tight area. Now, what's interesting here is that you take this leg, you take that leg, right? There's your measured move. Okay, oftentimes markets break a qualified channel, right? We get one leg and then a symmetrical second leg. You'll learn all about what I call the price action cycle, something I kind of stumbled into over 10 years ago and is the foundation of everything we do here at School of Trade, right? The price action cycle, as I call it. You won't read about that in the book anywhere, right? Kind of my own term. We usually see those two legs. So that area right there, that measured move area, look where that lines up with. It lines up right, oh my goodness, beautiful. Right at that wedge, right around that 74.50. So this area right here is one important support area. So most important thing now, combine these two things together, right? How can I combine them together? I know I'm bearish inside of a range. I want to go up, I want to fail, and back down. That is exactly what this wedge tells me to do. So the wedge tells me right now, we're getting kind of narrow in here, Joe. There isn't a very good risk-reward ratio. Let's get this thing to jump. When it jumps, right? When it jumps now up, the moving average, of course, comes over. The buyers will try to buy the pullback. As they fail, I'm selling into that failure. Okay, now I should draw this a little bit differently here. Goes up, moving average comes over. I just want to make sure I'm not selling inside that range. That's why I'm redrawing this, right? I don't want to trade inside that range. Okay, now what will happen is if you do get it inside, let's say it does this, right? Pulls back, right? Let's say it does that. What you want to do is instead of selling it there, look for a trap instead. Because a lot of times they'll come right back up, you know what I mean? Right? It'll kind of bounce out of the middle of that range and you'll get that trap overhead. So the bottom line is I'm expecting this big bull move up eventually here. If they hold it, 1, 2, 3, you got it. If they hold it, fine. And I know, I don't like the fact that I missed that buy, but it's not a reliable buy. It's not, right? If I would have tried to buy this one, I mean, look at these, right? Big blast up, buy it, right? No, back down we go, right? Big blast, buy it, right? No, it's bearish, right? This is not a bull market. But there's a pivot point here, Joe. But it's the 200 moving average, right? Isn't that support? It is support. But it's not a bull market. It's a bear market, right? We buy it support in a bull market, not in a bear market. Okay? I don't mean to baby around that, but it's that simple, right? So when I make a run up here right now, it's not a bull market yet. If they can hold that pullback, now it's a bull market. But didn't do it there, didn't do it there, didn't do it there, sure didn't do it there, right? What makes me think I can do it again right here? Once I get that, mark up that, mark up that, mark up that, right? And there again, same thing, right? There's your 1, 2, 3 reversal. Where's my target? Target's a big boy, right? Well-fed targets up top there, right? Back around 7,600, big round number. That's a big cry for tomorrow, but who knows, right? By the end of the week, that's exactly what will be happening here. Now, what if we go lower here, right? Same basic idea, right? Shot down, 2 try, 1, 2 back up, right? We go down, the crown reversal, same basic patterns that we've talked about so far. Or maybe it 1, 2, 3 and runs. Perfect, great, do it. Prove it to me. Right? Prove to me that you can hold that pullback. If you can prove to me you hold the pullback and you run, well, we're going through that low, and we're probably looking for a new channel here. All right, guys? Great stuff here on the Nasdaq. Don't get too aggressive being a buyer on this. Wait for those patterns I mentioned earlier. And again, what do you got for me tomorrow? Right? Shift that mindset. The mindset is not, let's go make some money, right? I know I want it to be like that. Trust me. You know, I grew up in a world where you get paid when you put in effort, right? You want to make some money, go do some work. Being a trader is the opposite of that, right? We get paid to wait. We do. In fact, the people who can wait the longest are usually the ones that make the most paychecks, aren't they? It's a weird world we live in as traders, isn't it? It's completely opposite of what our outsiders do, right? The non-traders. Okay, over to gold. Now, gold is kind of the opposite of what we've seen on the others, right? While the S&P and the Nasdaq and oil were bearish, gold is bullish. Okay, so in a bull market, right? In a bull market, what are we doing? In a bull market, we're buying into, think of it this way. Whenever I think of a bull market, I always think I'm buying into, right, seller failures, right? I'm buying, right, pullbacks to new highs, right? In a bull market, I'm buying seller failures. That's my favorite way to trade a bull market, right? I'm buying a failure. So, for example, we run up, the bears that take it lower, they pull back to the moving average and fail, and buyers are buying right into those stops, okay? That's what I'm talking about. Bull market, buy into bear failures. Okay, we have a pretty good idea where we're trying to go, right? Trying to go back to that gap. Again, anytime we have a qualified channel, right? 1 leg, 2 leg, that measured move up there at 1346, combined with that gap fill at 44.6 is a pretty convincing area here. It really is. Now, knowing that, it's a range, right? It's a range. What do we do with a range? We use the range to create levels of resistance above, to create levels of support below, which you'll learn all about in our video classes, the nitty-gritty details of that. Okay, we know we want to avoid the middle, buy the low, and sell the high. Now again, because we are bullish, I can be aggressive buying, but I've got to be very careful selling, right? So how do I buy this? Same pattern we saw back here. Right? Market makes a run for it, pulls back to the moving average. They try, they fail, and we go. Okay? Market makes a run for it, going lower. Moving average comes over. Sellers try to sell into it, right? And we're buying off that, right? Price goes lower. Moving average comes over. Bears now try to sell, right, into that move. We know where their stops are. We're buying into those stops. We're looking for pullbacks to the moving average, right? This is a failure pattern into a pullback pattern and a run back up. You'll notice I've got this trend line coming down, and I'm using that off this one. That's a great little support level there that also lines up right with that level here. Okay, I love this area, by the way. I love this 33.6. Look at that stuff, right? Once, twice, 3 times, 4 times. So you know that 33.6 is on everyone's chart. So everybody knows about that 33.6 level. Combine that with the low of that hidden channel. Combine that with the what we call a range expansion area. Get some hot stuff down there, right? Hot support level down there. Now what we need is the market to run lower, get those moving averages over, get those sellers to commit, right? And then again, it's a failure into a pullback, and then back up we go, right? Failure pattern into a pullback pattern, and then back up we go. And again, I'm just illustrating these. I have hundreds of chart lessons, hundreds of examples of these patterns, right, off real charts, okay, in the free trading class I mentioned earlier. It's also linked up below the video on the blog. Okay, now, what if we go lower? How do we turn bearish? 1, 2, 3, run, right? Strong move over. Prove to me first that you can hold that pullback. Then mark up that low, mark up that low. Again, up to that high up here, wherever it is, right? That low, that high, right? And that creates our sell zone, and we're selling off that low. Where's my target? Back down to retest the low from yesterday. Okay, that's the target. Now, as we go higher here, okay, what are some options? Well, just in case you can't see this, it's pretty darn bullish. So trying to be a seller up here is going to be a waiting game. It's going to be a test of our patience tomorrow to be a seller off of this. But what I would imagine is going to happen is we'll probably see the market run up, kind of fiddle around here a little bit, right? Once, twice, and down from there. That would kind of be what I would expect here for the sell, right? I would imagine us to go sharply higher, right? Almost too sharp, right? Almost too strong. Let the buyers come back. Let them try, right? Let them try buying it once, right? Let them try buying it twice. Like I said, it's going to probably be a game of patience, right? And then once we get that little trap, what do we call that pattern again? Crown reversal, right? Yeah, crown reversal, right? We talked about it on the buy side already, but that's on the sell side, right? And again, these types of patterns, they're very, very common. You just got to wait for them. That's the hardest part. Right? Far too many times what will happen is the market will do this. It'll make a run for it, and you're going, oh, look, it's going back in, right? And, of course, you sell here, right? Like I did when I was a rookie. We have this whole plan, and then all of a sudden a big red candle, we go, oh, shoot, get in, right? And you just jump in, right? Don't do that, okay? What'll happen is you sell down here. What's going to happen, right? The buyers will buy it up. Usually because you're selling low, you just can't put your stop way up here where it belongs. You get stopped out just to see it collapse without you. That's what happens a lot on these markets, right? You sell too early, it runs up, right? It just kind of taps you out, right? Again, because if you're selling low, you won't be able to get your stop up here, right? That's the big problem with selling low. It requires an outrageously large stop. Unless, of course, you're going to use some arbitrary, I always use a 17 tick stop, right? You know what I mean? That's the problem. When I was a rookie trader, I was like, oh yeah, every trade I take, 15 tick stop, 20 tick stop. Yeah. But when you think about it, if you sell low, you have a hard time putting that stop where it really needs to be to protect that trade. Right? And that's the problem with selling low or buying high. It requires a big stop to stay with it. A lot of times you'll be in the right direction, but you can't quite stay with it because it just taps you out. And then once it taps you out, right, you're throwing your keyboard and doing all those things. So what we want to do is we want to get it up. It'll probably chop around a little bit, right? Let it go once. I like to go twice just because it's so bullish, and then drop it in from there. That crown reversal, right? That crown reversal. Now, if we do see a strong break up here, could I buy this? You can, but you've got to look for that 2-try breakout, right? It's going to be up. It's, first of all, a very strong move. Then look for 1, look for 2, And remember, you don't want to buy high. That's the problem. There's really two things involved here. One is momentum. We need to get a strong move up so we know we're going to get a second leg. Okay, that's the first thing, right? You got to get that momentum going first. Then from there, I don't want to buy up here because that's where they're trying to go. Again, we don't want to buy where the goal is, right? You don't make any money that way, right? You got to buy low so you know where the mission is, right? You know where they're trying to go. That's why I said earlier, we know where they're trying to go. We want to make sure, though, that we get in as low as possible, right? And the best way to do that is a trap setup, right? A trap setup. All right, boy, we are looking great here. So gold is really giving us a lot of great opportunities tomorrow. Just got to wait and see what we get. Last but not least here on the euro, I'll bet that most of you guys and gals can tell me exactly what the plan is on this right now. First of all, what is the overall momentum of the market? Remember, it's all about what? It's all about momentum. It's all about risk reward. And it's all about, setup. Okay, now these all kind of intertwine, right? What is our momentum right now? Momentum is bullish. Why not bearish? Well, because we haven't seen them hold anything yet, right? We did see a strong move down there, but they couldn't hold that, right? We're definitely seeing a strong move down here, but they got to hold that, right? So we're still bullish right now. If I'm bullish, the next thing I need to do is find a good risk-reward ratio, right? In other words, I need to find a way for me to risk small to earn large. Why is it so important? Because when you risk small to earn large, you attract more people. And when you attract more people, what is the law? What does the self-fulfilling prophecy say? We all learn this, right? It's in trading 101. The reason why trend lines work is because other people use them, right? It's the self-fulfilling prophecy. The self-fulfilling prophecy is it's our lifeblood, right? It's our lifeline for trading. So if I have a big potential reward in a trade, guess what? All the experienced traders in the market, the people who really move the market because they've got really big accounts, right? Not these onesie twosie stuffs that we all start with when we're traders. We all start there, right? But I can't move the market with one contract, right? Neither can you. When we get a big potential reward, a good risk-reward ratio, the big money traders get involved because they know better. They've been waiting for that setup, right? And when they see the potential to risk small, earn large, what do? They load the boat. They say, this is the A-plus trade I'm waiting for, and they buy it. So once we have a good risk-reward, how do I get that? Well, there's my range. Right? Can I risk small to earn large up here? Yes, absolutely. Great risk reward right now, right? I know we have a range. I know this market's a range-bound market. I know it's bullish. I know it's into a range. I know when it pulls back, I'm using the size of the range to create levels of support, right? That's why I said earlier, I'll bet you can finish my sentence here tonight. This is a great risk-reward ratio. Now all we need is what? We need a setup. Okay, that's all we need. Momentum is bullish. We get a great spot for a buy right now. The problem is, let's zoom in. What's the problem? The problem is I need a setup. Strong move down here. What are we looking for? It's bullish. I can be aggressive with my buys. So I wait for that moving average to come over. I look for those sellers trying to sell off the moving average. You know what I'm talking about, right? And then I know the stops are failure pattern, pullback pattern, right back up, right? Obviously the failure pattern here is the most desirable because that's the one that gives you the best risk reward ratio, right? That's the one that allows you to risk small to earn large. The second one, the pullback pattern, is not bad because there'll be a lot more people in on that pullback pattern. There will. It won't be the big money in the market. A lot of rookies, what they'll do is they'll wait for that move up to get the confirmation, and then they'll buy the pullback. It's because they just don't trust it yet. You'll get there, but you just don't trust it yet. It's understandable. Okay, so those are two steps to look for as we go lower. Again, if they hold this pullback, because you might be thinking, well, Joe, it's a pretty strong move down, right? Is it bearish? If they hold the pullback, it is. Then we mark up that low, we mark up that low, that high, you got it, and we're selling right as we go back down. Where's my target going lower? Target going lower is back to that big round number around 12,000, right? That's also the retest of that big low, right? From not this week, but last week, right? So that's where they're trying to go down there. Where are the buyers trying to go? We get that failure, that pullback, and that run back up. Where are the buyers trying to go? They're trying to go back up to retest this high. Okay, from there, the measured move. Okay, and then from there, maybe 14,000, but the way the euro's been moving lately, probably not, right? Probably not. Right back into that range, right? That's the plan. All right, we are looking great here. We are looking great. We got the euro, the gold, the Nasdaq, S&P, and the oil. I'm all locked and loaded. You're all ready to go. I know I covered a lot tonight. I try to go as slow as I can, but we're already, an hour into this video, so I try to make it as fast-paced as I can while making it easily digestible. Guys, we're just getting started, right? I hope you can tell I enjoy this process of teaching to new traders. I have a lot to share, and we're just scratching the surface. Don't forget, every morning, Monday through Friday, 8 o'clock Eastern Time, we do it together, right? I'm setting the table tonight. Tomorrow, right, we'll come out tomorrow morning, 8 o'clock Eastern Time, and we'll do it together. Don't forget, you can get registered as a brand new member. There's a big button right below me tonight on this video for the advanced course. The advanced course includes your beginner classes, your intermediate classes, and your advanced classes. It also includes all the indicators, all the software. I'll even personally remotely connect to your computer and help you set the whole thing up, right? If you qualify. For more information about that, call me. I'll be happy to go over all the details, or register right on the website right below my ugly mug. If you're not ready yet to be a member, that's perfectly fine. Grab that free trial. The free trial includes the free classes, right? All the free course. It includes a free pass to attend our trade room as a guest. It includes hundreds of chart lessons, real examples we see every day in our trade room. You're going to love the free trial. You'll love the free class. And of course, at free $99, how can you go wrong on that? Don't forget, when you join the free classes, I'm going to send you an email. Check your email. Sometimes those emails get stuck in the spam filter. It's just the way the world works these days. So make sure you check your spam, check your junk, check promotions. And as always, right, be here next time. Now, I talked about this last night. There's no newsletter tomorrow night. I know I always hate to leave you guys hanging, but I've got some very important family stuff I'm doing here for the rest of the week in the afternoons. And so I'll be out of the office tomorrow night. No newsletter tomorrow night. We don't do them on Fridays. I know. I don't want this way, but sometimes you got to prioritize things in your life, and that's the way it works sometimes, right? I'll be back on Monday night for the next edition of our nightly newsletter. In the meantime, though, you know where to reach me. Don't be a stranger. Keep in touch. Call, email, Skype, live support, whatever it takes to reach out and get in touch with me. I'm always here to help. And as always, my name is Joseph. Right? Be well out there. Be nice to each other. Have a great rest of your week. And we'll see you guys next time. Adios, amigos. Bye-bye for now.